quality professional day trading education and trade dissection and analysis, this is the place. I'm Pat Mitchell. I've been a professional day trader for the past 11 years, and we are going to be going over not only just a trade that I personally took today, and we're gonna analyze it. We're gonna go through the entries, the exits, the hows, the whys, everything. But we are also going to be talking about two specific lessons just from today. So bear with me. I'm going to grab the charts and let's get into it. And I just want to say, for the ones that are putting in the work, with it being Friday evening right now, and you're in front of the screens looking at charts, living and breathing this, congrats. You are a badass. You should be proud of yourselves. So now that we are in the charts, we are going to be mainly discussing cues. We had a lot, though, and I need to mention SPY. SPY is really important today, because what we had here, if I zoom in on this daily chart, right where my cursor is up here, okay? So we are gapping up over all-time highs. Now, what's the one thing? This is kind of where this whole lesson stems from, how to spot traps, okay? Traps are always going to be set. Now, you have to remember, for those that aren't thinking that there's traps out there and that's all bullshit, you're wrong, and I'll tell you why. We need to know our opponents. It is us against them, and it is smart money against dumb money, okay? We are the dumb money. We are retail traders. And that dumb money label really holds true for a lot of people, because they're not playing chess. They are playing checkers constantly. So now I've got a question for you. What does Warren Buffett say about stocks or the market making new highs? You buy it. So that's where this starts from. And a lot of retail traders get that wrong, okay? You're not buying the breakout. If you buy breakouts, you're a mark. You're the mark. You're the target, okay? That's not how you're supposed to be trading. What he's really saying is, you're buying markets making new highs, but on a proper pullback into proper technical support. You don't buy the actual breakout. You buy the retest. Okay, that's the proper way of doing things. So that's where this starts. But with all that said, 99.9% of all retail traders, they don't wait for that. So there was a trap being set with us gapping up over previous all-time highs, which is this range here. Market broke those highs yesterday, and then we basically opened up right on top of the previous close. Now, most traders will perceive that as strength. And not only that, you're going to get short squeeze, a little bit of short squeeze from people that at the end of the day on Thursday shorted this squeeze, which isn't a bad idea. I would never do it, because it's like, just doesn't fit my methodology. But it's not a bad idea, because generally you will catch a gap down. Generally. Okay. Not all the time, but generally. Now, I'm not interested in trading stuff like that, but where all of this starts, and I am going to zoom in a little bit here. I don't want to make this too long-winded. It's already kind of getting that way, and apologies, but there's a lot going on here on these charts. So what happens is, we open up and we kind of pop up. We pull back into that support. And actually, a member had asked, but it was more so on cues, because we are opening up higher and we have sufficient distance into that previous close. Should we go long? Absolutely not. Nope, not interested. I don't care if this market ripped all the way to $700 per share. I'm not interested in that long today. Okay. And the reason for that is, it is a perfect opportunity for institutional money, smart money, to set a trap, because the market is making a new high. It is gapping up. It fits all the criteria for dumb money long entries. Okay. The only place you want to go long is into the level down here, which I had loaded. All of these blue levels that you see are levels placed prior to the market even opening. And it literally bottom ticked it. That's where they will drop it, and then they will ramp it up. But I also said, I'm not interested in the long today, because what they're going to do, and from a day trading perspective, it's fine. Obviously, there would still be a lot of money on the table. There would be a lot of money on the table here as well as here, riding it up. I get that. I understand that, but I'm not interested in that. I don't go long on charts that are at highs. Okay. That's just bare bones trading 101. You buy markets at lows, and I'm not saying that there's not long opportunities along the way. There's always long opportunities, guys, but generally when we are extended, especially when you take a look at the measured move on this, we're quite extended. And it doesn't mean that it can't still go up. It just means that I'm not going to be a part of it. And I'm okay with that. Like I said, don't care if this went all the way to 700 today. It's not something I'm interested in. And these are the types of rules and like hard nose that I have put in place that have kept me safe for 11 years in the markets. And this is why I've been successful, consistently successful for this long, because I have rules in place that I will never break, right? Just like you breathe air and drink water, to stay alive, I will never break these rules. It won't happen. It's a hard no. So to get back into the trap, I said, even in this area right in here, I said, this is starting to look like a trap. On this pullback actually is where I pointed it out. So I pointed that out at 9:38 a.m. that what's going to happen by the end of the day is a sell-off. And what they're going to do is they're going to make it look like it's very strong. And they did. They made it look like it was strong. And then right in here was the first trap. Okay. So it gives a perfect, absolutely perfect setup to buy that pullback. It is a slow, remember this is free information that is actually useful on pullbacks that are slow and controlled with consistent volume. If you look at these candles down here, it's very consistent volume. That is generally a go sign. You want to start averaging into this. And they even bought it at the VWAP. You know how all these knuckleheads out there, they talk about the VWAP like it's some sort of like grand indicator. They don't actually know when to trade the VWAP. There's very specific, and I even have videos on my channel here for free telling you and showing you exactly when to use the VWAP. This is not the case, but most retail traders don't know this type of stuff. So they go long. Why? Because they bought a singular candle. If you take a look at that candle, it has a big bottom wick. Okay. So they're using all of the education that is out there for retail traders against us. And this is how this trap gets set. And then once it comes down and confirms and pops back up, numbers come out. And they use numbers. Numbers are all bullshit. Numbers and data are bullshit. It is total bullshit. It is used to drive stocks into certain price points. They already know if the data is going to be good or bad, guys. Okay. Don't think for a second that it's like it's behind some lock and key. This data is already known prior to it being released. So they set the trap according to data. So once data comes out, they wash it down, and it's very consistent volume. That tells me that there is institutional money all over it. And then they want to start driving it into a lower price. When they drive it into that lower price, which is my personal entry to go long on this, which I didn't take, and we'll go over my trade here in a minute, it then holds, confirms, and pushes. And I said back here, right here at 9:38 a.m., there will be at some point today, and we're going to talk about time frame, sometime today, there will be speed. And when I talk about speed to the downside, I'm generally talking about downside, a sell-off, real fast, real quick. They're going to catch you off guard, and that's what they did here, right there. It looks like it's cruising on up, although it's pretty bear flaggy, and then they wash it real hard and fast. Very little bullshit bounce, and then just continues all the way down, and then they hold it, and it's a cycle. It's a cycle that smart money will use to constantly draw more and more and more longs in until ultimately this is what happens. Okay, this is what happens. They sell it all the way down, and they fuck over all of those longs. Guys, these traps, once you know what you're looking for, I can call every single trap, every single sell-off, every single squeeze, all of that. And I do it live every single day, guys. Like it's not guessing. It's not like it's a fluke. This is stuff that actually can be taught. Okay. So there's more to it than that. Obviously, this is YouTube. I keep a lot of this stuff held back for my members, but I give you guys some pretty quality information and education. Make sure to like and subscribe if you aren't already. So that's how these traps get set. Okay. So all of that said, I want to go short. Okay. Now, the problem with catching these traps, and I don't want you guys to get it twisted, it's not about trying to catch the trap. So if some of you out there, well, if you knew, if you claim you knew it was going to sell off, why did you not hold all day? Because that's not the type of trader I am, period. I don't trade like that. There are certain situations that I will, but we're only on day 3 of this consolidation range into highs. It's not ready to sell off yet. And that's what people need to understand. I've been doing this a long time. I know when the big day is going to come. Just like on this big day right here. I positioned myself greatly for this. This was my largest trade to date. If you want to know how much it was and how I traded it, go into my channel. It's in there and it's recent. It's from this day on December 18th. It was a monstrous day. It was disgusting. Felt criminal how much money I made on that trade. But more importantly than money, it's about how I traded it, and I traded it really well. I'm very proud of that trade. But I am a short-term opportunity trader. I've been talking about this a lot here on my channel, that you need to know and understand what type of trader you are. And I'm a short-term opportunity trader, especially on Fridays. I'm only looking to trade the first 15, 20 minutes and get the fuck out. Go enjoy my weekend, man. Go enjoy what we as traders work so hard for, freedom. So the trade that I took, now all of that aside, the trade that I took, and there's one more really good lesson here. So the trade that I took here, and I told my members the plan on Qs because we were opening up. Oh, where did that go? Did I just screw that up? I think I did. One sec. That's so strange. I don't know what happened to that. That really sucks. That's all right. So the trade that I said here on Qs that we wanted was not to go long. Because we're opening up above, I want it to fail. When it slices through and disrespects that support level, I want it to come back up and retest. When it retests, I will execute the short. Now, you might be looking at this and being like, oh, well, you only got, 70 cents per share on that. Yeah, but because it's such a high conviction trade, I'm locking in over $5,000 in like 10 minutes. That's all I need. I don't know about you, but I'm okay with that. So executed the short here, paid myself on the way back down, popped back up, executed, gave myself an ad. That's this, this ad right here. And then paid myself. And then we got caught in a squeeze. So that big pop back up. Let me clean this up. So when it pops up like this, and it was a volatile pop up, I talked to my members all the way through it, and I said, don't freak out. Just relax. Only stop out on confirmation, right? And that's where it popped up here as well. So when it pops up, I add, okay? I'm going to take that opportunity and add. It washes down, I pay myself. That's the trade right there. I'm holding very small. The rest of it is where the squeeze happened. I kind of fumbled that a little bit. So when it comes back up to retest, that's where it squeezed. Okay. And it squeezed and it was like a blink of an eye. It just went up. So when it does that, don't freak out. You want to wait for confirmation. Do not stop out until you properly get confirmation. Too many people will stop out and then have it reverse and come all the way down. Don't do that. Okay. Just the damage is done. I've got a video on my channel as well where I talk about when the damage is already done. All of this stuff is free on my YouTube channel, guys. So go check this stuff out. Go flip through all of the videos on my channel. They'll really help you in your trading career, all for free. So that was the trade. I finally stopped out the rest and locking in $5,165 on the day. Single trade, bing, bang, boom, week's done. So again, if this is you're a returning viewer to my YouTube channel, please subscribe. I don't ask for much. This is free, but just like anything else in life, nothing's really free. There's always a give and a take. Don't be an asshole. Subscribe if this is the second time coming to my channel. If this is your first time, just give me a like. That's all I ask for. And if you have any questions whatsoever, just ask me. No problems. As long as you're respectful, I will always answer those questions. No problem. I've been doing this a long time. I've been helping people for the last 8 years, and I plan to continue to do this for as long as I can. And if you don't want to wait and you don't want just the free stuff and you're really serious about your day trading path, come learn from a proper proven professional. Come to tricktrades.com and I will see you there. I expect to see some new, shiny, bright, smiling faces in the room on Monday. No more messing around, guys. Let's rock and roll. Tricktrades.com. Adios.